Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Presently, the Australian dollar holds steady in a quiet session as the US markets were closed for President's Day. As widely expected though, on Tuesday there was a bit of excitement after the Reserve Bank of Australia, the RBA, reduced its official cash rate by 25 basis points to 4.10%, marking the first rate cut in 4 years. Now all eyes turn to Wednesday's US Federal Reserve's January meeting minutes, where officials held rates steady amid inflation and tariff uncertainties. However, from the report, it could provide insight into the members' views on inflation and tariffs and the labour market, shaping future policy moves. So no doubt it will be a bit of a whipsaw session. Nevertheless, looking at the technicals, they're still somewhat bullish since breaking the 60-day moving average and currently hold to a target around 63.80 and on to 64 to possibly 65 cents, with any weakness finding support from the lower side of the range around 63 cents. The dollar index was still a little bit mixed due to the short holiday in the US, as the markets were closed, as I mentioned, for President's Day. However, I still feel the market has potential to rally on, that is to 105 to 106, and reassess from this area. Support presently is around 104.1020. The dollar yen, well, the bears are still weighing on the market, and I still anticipate further weakness into the coming session that could see a move through the level of 151.1030 and lower to 149.2060, where profit taking may emerge like it did previously back in November last year. Any advances should find resistance around 152 to 152.5. From the given call from the inverse end shoulders, I still expect to see the move to a trajectory of 129. The trend is very clearly positive here and therefore should support the rally, looking towards the first target around 126.60-65 and on to 127. And as I mentioned, the measured move from the head to the neck and from the break of the neck to 129. Since the rebound for gold, the market hit the support, which is now resistance, which is somewhere around the region of 2,938 to 44. But nevertheless, the market is still finding demand, even though there is a bit of divergence here from both the MACD and the RSI, but still bargain hunters or even bullish traders still anticipating the break beyond there and looking to $3,000 an ounce and reassess. Wrapping up with oil, since rebounding off that key level of 60.80, the market is finding 3 positive days, and that may linger on to the level of 73.30, a key point. A break above there would give the call to $76, but I do like the way this is shaping up, especially with the divergence creeping in and the MACD strengthening, and is in a prime position to support the bull move. So let's see how it all unfolds. But as I mentioned, all eyes on the FEB minutes later today. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report and hope you enjoy the great start to the day.